All right, event trader here back as we're testing that 58.15 level. So we'll see if it can hold on. Looking a little heavier out there, and that'll be our perfect segue to bring in options trader Brandon Mars for the options playbook and get his thoughts on this market in the afternoon. Brandon, would you be short or long here? And we'll go for the S&P futures.
Yeah. Um,
Not to
yeah,
throw
like
you
you said.
right into the cauldron right away, but I know you love a good chart. So just from a pure chart perspective, what do you see here?
Yeah, I've been kind of waiting for most of the morning just for it to kind of rip lower. And, of course it does it 15 minutes before the call. So steals what I was going
Yep.
to talk about. Um, one thing I've been kind of looking at on the S&P futures is, it's kind of looking like a double top throughout this morning and into the afternoon, and yeah, just kind of sitting there at the opening range bottom right now. And if it breaks that, I would imagine that the 200 day would come back into play. So that's kind of what I'm watching at the moment.
Yeah, that's what I was looking at exactly too. It feels like that would be the ideal level for it to come down. Just taking a look here at the continuous, which I assume is exactly what you're talking about, Brandon.
Yes.
We got that down at 57.92, so not all that far away, and could certainly see people start getting a little antsy. I think I'd be buying a bounce off of the 200-day myself, but that would set up nicely for a potential reversal pattern too, right?
Yeah, I mean, that would kind of give on the daily chart kind of the shooting star type candle look to it. So,
Yeah.
yeah, I mean, that would maybe make me hesitate a little bit. I mean, just being honest, more than the charts right now, I think April 2nd's making me hesitate more than anything.
Yeah, yeah, and I mean that is a fair assessment, right? I think that's making everybody hesitate a little bit, leading to some choppy price action that we have going on here at the moment. As and even that, hopefully that'll provide some certainty finally. I mean, I think you you would agree with the adage that the markets prefer bad news over uncertainty any day of the week, right? So um, I think that's kind of how I'm looking at April 2nd. Like, don't come out and start talking about how well we may change our mind after this. We'll see how they react. You don't want to see a bunch of headlines like that where Liberation Day still remains beholden to the whims of the whims of Twitter Day, right?
Yeah, and outside of Wall Street too. I mean, that's kind of what I'm reading from the business community. I mean, I guess those are
Yes.
one and the same in a way, but yeah, they're just basically just saying, just get me to April 2nd and just give me the answer so I can know and I can plan. So yeah, like you said, I think just any sort of news and certainty over the uncertainty right now.
Yeah, I would agree. I mean, that's going to be a big day in the markets. Could be a big day in nothing, perhaps, but I can't imagine that we're going to get too much on the aggressive buying side or selling side in either direction at this point. Feels like we're setting up for some chop and consolidation. Is that what you're expecting to see, Brandon, or do you have a more upbeat or downbeat view at this juncture?
I'm more downbeat. Um,
Yeah.
just with the uncertainty, and I hate to say it, but like I was looking earlier, what was the company um, talking about how they were going to idle their Dearborn plant, Cleveland Cliffs. Um, you know, idling their Dearborn plant, laying off 600 people, amid weak auto demand. I just feel like there's a few more of those things under the surface in conjunction with April 2nd. And, from the way that this whole rollout has gone, I don't think April 2nd is going to come and we're going to have 100% certainty.
I agree.
So,
I agree. That's
um,
my biggest fear. That again, and we saw it a little bit yesterday when he had the headlines where he was kind of hedging about April 2nd being the release of everything. So boy, yeah, but you definitely hope. And then we of course go right into Q1 earnings season, right?
Yeah, which yeah, again, I think this current quarter I think will be okay. I just don't know what those outlooks are gonna look like. And just from a chart perspective too, I mean, we had that really big, move down recently and we've seen a nice little bounce, but just kind of looking at charts in general, whether it's an intraday or a longer term time period, after a big move down like that and you have a bounce, I mean, it's not all that odd to go down and have a quick check back down to that low area,
Yeah.
right? So, again, just from all those things combined, and maybe putting on my tinfoil hat here today, that's going to be cheaper today than presumably after April 2nd with the tariffs. So I'll wear it now while I can. So,
Get it in while
um,
you can.
it's you kind of got that little bit of the bounce over the 200-day and the 20-day or mid Bollinger Band, whatever you want to call it, on the S&P. That's those are the types of things sometimes too that turn into the head fakes before you go and you get that check down to the lows again. So, just kind of all those things considered, I guess if I had to wake up in the morning and, give you one direction, it would probably be just leaning towards the downside.
Yeah. Speaking of leaning towards the downside, seeing sellers definitely trying to lean on the markets right now. So, all right. So, we'll be discussing that a lot more over the next couple of weeks, I'm sure, Brandon. So, why don't we take a look at some of the individual names that you're looking at the moment? One such name, ticker symbol VSAT, VSAT, which making a nice little push up towards its 200-day on the daily chart. What time frame do you want me to have for you here?
Just the daily's perfect.
Okay.
Um, Yeah, I mean, I think this is probably a name that's been on some people's radars. And, honestly, I've been doing some searching recently for some Starlink competitors as, there's all sorts of rumors of, European countries and things, moving away from there. So just that's kind of intrigued me on the fundamental perspective. And I've just been watching it for quite a while. Haven't done anything with it, and then I got an upgrade yesterday from Deutsche Bank, and started to see some pretty decent call activity, and put in a very solid bullish candle yesterday. Kind of snapped it out of that little consolidation that it's seen around all those moving averages. So kind of got my attention yesterday, and yeah, I was looking at the call activity, and the heavy some of the heavy activity was on this Friday's 12 call. So again, lining right up with the 200-day, and yeah, like you said, getting a nice push here. I mentioned it this morning. Just kind of the too many candles for me on the intraday. Just started to have that long upper wick, and it just kind of seemed like it was going to turn a little bit, and that's what ended up happening. But again, I think that 200-day is going to come into play. I'm being maybe a little cautious at this point because it is up above that upper Bollinger Band, but seems to be a stock with some momentum between the upgrade, and on the fundamental side, I don't have full details, but they did announce some sort of new partnership, I believe, with a European company this morning. So, something with a little bit of a tailwind to it.
Yeah, no, good looking chart. Again, got to get up through that 200. So, what strikes would you be buying here?
For something like that, and just kind of how I always, generally speaking, think, I'd probably keep it pretty simple. My target would presumably be the 200-day, which is right around 12. So, I'd probably look towards, the 12 strike. Outside of that, would maybe just be getting a little further out of the money than I would want to be. So yeah, I usually just kind of keep it simple, and again from there, if it got up to the 200-day and was looking like it was going to break out and go further, that's when you can always just go ahead and roll your options up.
All right, so I like that plan. So let's take a look then at the next name you got on your radar. Cybersecurity making a nice push today, Brandon. OKTA was the name that you were watching, and I'm going to follow up with the question on Palo Alto for you as well. But looking at this OKTA chart, that does look pretty nice. I mean, especially when you consider how weak the broader market's been.
Yeah, nice looking chart. Get a little bit of the ascending triangle there on the daily. And then again, this was a name that some of the options activity caught my attention yesterday. Saw some pretty heavy volume on the call side. Seeing not quite the saw some morning follow through in the call activity, but it's kind of trailed off a little bit. So again, just between the fact that it had a technical pattern coupled with option activity, that's kind of one of the things that I like to look for. So that triangle would give it some more upside if it could truly break. The one thing that's got me a little hesitant as we get into the afternoon session here, you got the back-to-back days of the upper wick bouncing off of the 118-ish area. So seeing a little bit of a struggle. Again, I think it's with its relative strength, it's worth watching. But yeah, definitely seeing that rejection for 2 days is not something you always want to see on a technical pattern.
All right, let me ask you about Palo Alto. That was one that I was looking at that I thought looked like it was building up nicely here. You got any thoughts on Palo Alto? Sticking with the cybersecurity place.
Yeah, I almost got my Marabozo today, huh?
Ooh, you love a good Mariposa. That's why I sent it to you, Brandon. I set you up nicely.
We didn't even plan that. It's perfect.
I know, right?
Yeah, I mean that is, all the cybersecurity names have been looking, pretty strong. Yeah, you kind of got that nice RSI getting above 50. You got the MACD that's got a nice upward slope headed towards the zero line. I wouldn't mind maybe seeing a little bit more volume come in on a big green candle today, but yeah, I mean, pretty constructive looking chart as it kind of continues to grind upward. And geez, you would think that kind of the recent highs would eventually come into play if if the markets don't melt down with over the next week. That is.
Yep, yep. So, all right. Next up, transport name that's been pretty weak here. UPS diving down 4.5% today. What's your thoughts on UPS?
So wanted to watch UPS. Just one obviously talk of recession, tariffs, all that stuff. Obviously,
FedEx
transports.
last week too, of course.
Yep, FedEx last week. That was kind of what started it for me was kind of the FedEx outlook, and again, just transports don't tend to be the most loved stocks when it comes to tariffs and a potential recession talk. So I had it on the radar today, and just I've had it up in front of me real time for most of the day. I mean, it's kind of just gotten smoked today. I mean, I'm on the intraday and I'm looking at the 5 minutes in between 9:30 at the open all the way until 11:50. I mean, you only have three green candles there. Pretty heavy volume too. So I was just looking the 65-day average volume's about 6 million shares, and it's already at about, I think, six and a half ish. Yeah, six and a half. So definitely a little bit of conviction in the sell off. And yeah,
Well, let me ask you on that because now with Palo Alto, you said you wouldn't mind a little bit more green on the volume on the bar, right?
Mhm.
This isn't a particularly big red bar either. And usually, I'm just asking because I'm a little shocked because usually when you see a move this aggressive, especially on the sell side, there's a little bit more of volume in there. What's your thoughts on the volume on this particular sell off? Does that impact you at all?
well, So that's kind of looking doesn't look as pronounced on your chart as it does on I guess on Thinkorswim. Well, I know they're about the same as I look. Well, if I'm looking at that, you've got your average volume at like 6 million per day, and it's already at 6.5. And, presuming that we get an uptick in volume into the close like we usually would, and, you've always kind of got that last 5 minute candle, which usually has some elevated volume, which I would expect after this move today. So, at this point, we've got 2 hours left in the trading session, and we're already above the average for the day. So I'm kind of making the assumption that that's going to add and continue to build throughout the afternoon and give us some pretty heavy volume overall.
Okay, we'll keep an eye out on that moving forward then. So UPS, what strikes would you be buying here?
At this point too, obviously made a pretty good move as you do get into that afternoon session. Got to kind of always be careful of the squeeze there. But at this point, just kind of taking a look at some of the volume, UPS can get kind of thinly traded on the options front. So just quick glance here. I'd probably be looking at the 108s with the assumption that the selling would follow through tomorrow and we would kind of break that support at 110. That puts me a
Get a
couple of
flush
strike.
below that February 3rd low.
Yeah, that would be kind of my
Yeah.
assumption in this case. So just a quick glance here. I mean, the 108s are a little bit on the higher side of the volume today, and I'm just looking at this
What's
Friday's
pricing
expiration.
look like on a 108 now when you get a big drop like that? That's got to kind of disrupt things a little bit for you, right?
What does the pricing look like?
Yeah, I'm assuming that they're going way up in cost.
Um,
The 108 as opposed to like yesterday, right?
not too bad actually.
Yeah, that's good.
Your assumption would be pretty spot on with options theory, but they're not too bad. I mean, we're current IV percentiles only the 36th percentile, so
How do you read into that? I mean, you know a lot about how they price these things. Would some people be looking at year-to-date lows being ample support for a bounce or something? Or because I would have thought that that would have maybe not skyrocketed, but certainly, exponentially up a little.
I think the thing with a stock like UPS, again, just not trading a ton of options and, maybe not being one of those super high flying, AI, tech stocks, crypto, whatever. I think that comes into play a little bit because, yeah, I mean, if you were to take something like a quantum name and it was to make a move like that, you're right. It would probably spike up quite a bit. There's always that kind of in the back of my mind that if the options in particular and the put price aren't skyrocketing on me, that maybe there's going to be a reversal tomorrow, right? I mean, that's kind of what ends up happening, and that's kind of one of the things that the market maker I learned from kind of always told me to keep in the back of my mind was if a stock keeps kind of moving down, but your options price is not moving on you, especially towards the end of the day, keep in mind that that is a sign of a reversal. Yeah, no, I mean, as I look at it, it's the implied volatility is only in the 30% range, 36 percentile current IV. I mean, the 52-week IV high is 45 and the low is 20. So you kind of right smack dab in the middle of it almost. So yeah, just not really seeing the spike. So, again, I guess in theory, just using basic options pricing, you could see this as a little bit of maybe an options arbitrage kind of situation.
All right, there you go. Opportunities. Opportunities is what we want, right, Brandon?
Well, as long as it keeps going down for you.
I
And
don't know. Nothing strikes me that it's going to be going up anytime soon. So.
Yeah, and I think that we were talking at the beginning, just, where's the market going, leaning towards the downside or the upside. Obviously one stock can't paint the whole picture, but when you see a big transport like UPS down 5%, and I mean, it's basically sitting right now, right at the lows of the day. Saw a little bit of a bounce with very, very little enthusiasm. It's not the greatest thing that you want to see if you're a bull.
Yeah, well, it's kind of interesting from that aspect because I'd argue Amazon's a bigger transportation stock than uh, UPS and FedEx. I guess it's not a pure play though, right? So because Amazon was one stock that was jumping out to be a pretty decent looking chart here, getting above that 200.
Yeah, I would agree. I think didn't Amazon like actually officially pass UPS in their shipping
And
these
FedEx,
days?
I believe.
Okay, yeah. So
So
yeah,
especially with UPS cutting out their Amazon
yeah.
contract.
I'm sure that wasn't a fun conversation to present to the board.
Yeah, yeah, right. Um, and unfortunately for anybody who knows about my page index, she has retired from UPS, so I no longer have that good measurement. I had a friend that worked over there, Brandon. The more angrier she was, the more I knew that they were doing better because that just meant she was real busy. So, all right, let's take a look at the last name on your list here, and that is Baidu, Chinese ADR, of course. Had that nice little breakout a couple of days ago, but then that nasty reversal pattern, and I assume that's what's catching your attention right here.
Yeah, it is. So I'd actually put in my morning notes that I was kind of interested in Baba after the weakness yesterday, and it almost engulfed the Friday bounce off of the options expiration day. So I was kind of curious if that was going to put a little pressure on it, and I mean, it is seeing it again. But then I kind of got more intrigued actually by the Baidu daily chart based upon that reversal that you just mentioned. Yeah, I mean, it's got the shooting star candle. Something I've mentioned this many times before, but usually I like to see a shooting star candle a little bit more, towards a long uptrend, really finding that trend reversal. But I do think it's worth noting here. I mean, it's looking like a pretty solid rejection, and I don't know. In theory, if this candle were to hold true, very much to be determined, that would be a potentially lower high from what, like a week ago, and it's got a looks like a bearish MACD cross that's happening. A quick check down again to that 20-day doesn't seem too unreasonable. Got a little 5-10 moving day cross, which I always like to trade. So, a few different technical things kicking around on it that's got me interested. And yeah, again, kind of looking at the volume. We've got some time to go because it's still kind of looking low there. But if the volume picks up in the afternoon, the red volume today could be higher than the last couple of days on the bounce, which always kind of intrigues me if looking to short.
All right. So we'll keep an eye out on those. Obviously, with tariffs on deck here, you know, Chinese ADRs will certainly be in play. Also, a lot of headline noise potential around potential June meeting between Trump and Xi, right? So, but you got quite some time before that's going to come to fruition. So, certainly the potential for a downside move before we start getting into that birthday meeting that we've been hearing whispers about. All right, quick look at the S&P here, Brandon. Any thoughts on this little pop down of 58.11? Trying to reverse it now. What would you want to see in order for this to avoid a test that 200 day? I'm thinking there's a test that 200 day coming in, but what would get you thinking that we could possibly avoid it? I'll put up a 5 minute chart for you on the June contracts.
Yeah, I guess the thing that's kind of catching my attention is the volume that's coming in right now on this current candle. So It's picking up. They definitely stepped in. Nice long lower wick. I guess they got to kind of get back over that resistance there that would have kind of formed the potential double bottom neckline. So maybe getting back through there and maybe getting a follow through candle here on the green would get me interested. I'm still just kind of leaning towards that 200 day though, like you just said.
Yeah, yeah, I agree. All right. So we'll keep an eye out on this as we're chatting along here. But we've been talking a lot about April 2nd coming up, Brandon, and it's something that's been certainly on top of your mind, on top of anybody who trades minds, of course, because it's having a a major impact on everybody out there. But you've been trying to think of some ways to maybe take advantage of that. So um, that'll allow you to be a little productive as we await that headline noise. So let's talk a little bit about that, some of the things you're looking at, and then I'll just fire off some questions to you on it.
Yeah, so I did something very scary last night, and I decided to see what the internet had to say. So got weird quickly as I I decided to, and I usually do this to just kind of brainstorm, see what others are talking about, etc., before coming up with these. And yeah, I did a quick search about option strategies for uncertain times. And yeah, I got plenty of articles about tariffs, managing businesses through uncertainty, and, a few self help articles. So, if you need any help with your meditation or anything later, Gavin, I can give you some new tips I found last night.
I like it. I like it.
So, um, I ended up landing on fence options, and I have to admit, I actually was not too familiar with this term. Haven't ever used it before, just for my full disclosure there, but just thought it was kind of something interesting, and here we are. So, a fence is it's a lot like a collar, basically. So they're both used to protect a long position against losses. But a fence uses multiple options, usually three legs versus a collar, which only uses two options. So again, just kind of besides another tool to potentially explore in the options trading world. Kind of what caught my attention on this one was with a fence versus a collar is they're designed to create a wider range of protection. And circling back to April 2nd, a wider range of protection just sort of seemed like something that could potentially come in handy here in the next couple of weeks.
All right. So I guess before we get too deep into it, how would you handle? I mean, because that's obviously raising the degree of difficulty in managing the position. So, just in this general scenario with the fence, what would you be using? Would you just make sure to have all your stops in? Like, what would be your methodology thinking for just managing this going in?
So I'm just jumping a little ahead on the notes, just so you know.
Okay, I'm sorry. I'm
No, no,
just
no,
trying to.
no, no. You're
I
you're
always try
good.
to keep things in line with you and Carmine, so I don't throw you off. Sometimes I
No,
ask
no,
questions
you're
that are further
you're
down.
good. I was just giving you the heads up, so you know.
Okay.
Yes, so the thinking there, as far as stops and everything, is from my research, it seems like most traders would hold this strategy until expiration comes up. So kind of what expiration dates you pick would help determine kind of how long you have the protection on your position. So even though this is kind of the most common strategy, adjusting or closing prior to expiration it's always an option. So, that's, I guess, kind of how most traders would enter into this trade. To answer your question, is it wouldn't necessarily be to have all of the stops in place. It would be more of how long do I want to keep the protection on this particular position.
All right. Yeah, that makes sense. So, Okay, so before I ask you that, you're about to break into the next section for this. So that would be just kind of comparing the fence versus the collar and how you'd set it up.
Yeah, so setup would be if you hold a long position in a stock, ETF, whatever it might be, you would sell a call option with a strike price above the current price. You buy a put with a strike price at or below the current price, and you sell a put with a strike below the first put strike. And these would all have the same expiration date. And similar to a collar, the premium collected from the selling of the options will either partially or fully offset the premium paid to buy the long put. So, yeah, again, kind of similar to the idea of using a collar as, you can do a zero cost collar, for example. Sometimes you can earn a little credit. This is a way that, traders would kind of try to implement to get some free protection during a downturn. So, just taking that and giving a real world example, and apologies, this is using last night's market close on the stock price and also on the options pricing. So it's changed a little bit. You'd probably construct it a little bit differently at this point based upon stock movement, but giving a real world example using Apple. So let's say you're sitting here today and you own Apple, you don't want to get rid of it, but you think all of the components of the phone are going to get caught up in the tariffs next week. Maybe they end up being a target for China, whatever it might be. But you think it will be resolved by the April monthly expiration. That seems to be kind of a generous thought, but just for conversation purposes. And again, I point out the April monthly expiration because you're kind of thinking about this trade from a time frame of how long do I want to protect this position. So, what you could do is you could go and sell a call with a strike price of 225. Those were around 380 last night. You buy a put option with a strike of 220 for about five and a quarter, and then you sell another put option with a strike price of 215 for about 340. So actually, in this case, you would end up with a net credit of a couple bucks actually. So again, it would either level itself out. Maybe sometimes you might have a tiny little debit, or you'd have, in this case, a decent little credit. So, that's kind of, again, why traders would put it into place of just kind of a potential cheap way or very tiny profit to provide yourself portfolio protection.
Okay. Um, Now you kind of are liking this as a dividend stock, you think, or a dividend paying stock?
Yeah, so that was kind of one thing I read from a few comments of why people would potentially use this. So, let's say that you do, own some sort of dividend paying stock that you want to hold and that you're, in some cases, that you're actually using for income purposes. So, let's say with all the tariffs coming up, you've got some long-term holding in some dividend stock and you don't want to get rid of it. You like getting your quarterly dividend and use that for groceries, whatever it is. You could use something like a fence to act as protection in case, things go south next week. So yeah, that was just kind of one of the things that I read was it is commonly used for dividend paying stocks.
Okay. Um, Obviously not a very widely used strategy, right? I mean, I'd never heard of a fence. I'm assuming it didn't sound like you did either up until you did a little research. So, like, I mean, do you find people using this frequently, Brandon? Or
I've at this point, I think we've done probably 50 plus of these, and
yeah,
every time I put these together, I take whatever term, strategy, whatever we're looking at, and I go and do, Google search, and I pick through a whole bunch of different articles. And I have to say, there was a fairly minimal amount of information on this one in particular. Um, so yeah, again, just not super common. So we've like I said, we've done 50 of these. We're running out of option strategies out there. So
Yeah,
just
yeah.
grasping for the new idea.
We can always just talk markets. People love that too. So, but yeah, no, okay. So this is good. Just looking at what's the general length of holding for this? Would you say is this a longer term strategy? Do you think, Brandon, or would this just be for kind of prepping yourself for a big event like an April 2nd?
Yeah, I mean, I think again, it kind of goes back to the thinking of, how long do I want to protect this, position? I would argue if you're sitting there saying to yourself, well, I want to protect this stock for the next year, I don't know, I could probably make the argument of why don't you just sell the stock then? you
Right.
know,
Yeah.
so um, I if I were to be sitting across the table from my parents and, going over portfolio strategy with them, I'd probably be looking a month, maybe 2 months tops, personally. And, again, I'd probably have some sort of, obviously, if you're owning a stock, you want the stock to usually go up, right? So, um, if I'm looking at a period where I don't think the stock's going to be going up for a while or it's going down, then, I might just exit that. But when I have some sort of catalyst, maybe it's a investor meeting, an annual investor meeting, and you're fearful of what they're going to say. I suppose you could use it around an earnings if you just weren't super excited about maybe an outlook on a stock, like we're probably going to find in this quarterly earnings. Yeah, again, earnings and options pricing throws a little bit of a curveball in there, but yeah, I think the perfect example is April 2nd. Right, we've got a pretty advertised event. We're either going to probably have just an absolute flop, or things are going to be resolved. Maybe we climb higher, or we just get smoked. And my thought is that I'm going into April 2nd. I'm thinking we're going to get smoked. I want to protect this position. And perfect, 2 weeks later, I have a nice monthly expiration where I'm going to have, presumably plenty of liquidity to set up this option strategy. So yeah, I wouldn't look too far out on it personally.
All right. What are some of the risks to it? This strategy.
Well, I mean, the risk, yeah, I guess probably similar to other, defensive hedging strategies is you're going to get protection, but you're also going to give up some potential profits. So, I mean, the term fence, I mean, you're literally like, in theory, putting a fence around your position. So, if all of a sudden April 2nd comes along and, you do this to Apple and China says, oh, hey, by the way, we had a great meeting with Tim Cook while he was over here. And, we're going to give every government employee a new Apple iPhone, and, we're going to give them out in the, in the schools to kids and Apple stores, then, obviously you're going to miss out on some of that upside.
All right. Anything else on the fence strategy here that we didn't touch upon?
No, I think that's about it. Again, just hopefully another potential idea. I know that there's some people in the chat room use the callers quite a bit and use them kind of well. So just kind of another potential strategy to think about there if you're trying to pick up some cheaper protection in these crazy times.
All right. I like it. It's always good to have a little bit of protection. Amazingly, Brandon, we are seeing bulls holding up at the moment above that 58.15 level. This could be a last gasp for them. Um, This makes for a tempting short right here, I would have to say.
Yeah, I mean, I'm looking at the S&P and the Nasdaq next to each other here on Thinkorswim, and you got two shooting star candles forming. Yeah, again, I like to see those at the end of a long trend, but I think this is potential for another lower high here. So we attack that level again, and you got to think that 200 day comes into play.
Yeah. So, all right, I'm gonna fire on that right now. So where are we at? 58.20. So I'm going to be getting short here at 58.20 in the S&P. I'm going to be risking 8 on this play. It's going to be a quarter size risk. I will get this up to the site here momentarily. So there you go, Brandon. That's how the sausage is made over on this side.
All right. Well, I will be rooting for you because if you do well, that means the first round's on you the next time I'm in the Carolinas. So, well, let's.
The triangle will be awaiting your appearance.
Right. I will short it in solidarity with you. So,
All right, my man. Thanks as always for coming on to um, to the audio here. I know it's always very much appreciated by the team, by the subs and everything. So we will have a replay of this posted soon. And if anybody's got any questions for Brandon, feel free to hit him up.
all right. Thanks, Kevin. Appreciate it.